SEBI, that is the Securities and Exchange Board of India, is celebrating its 35 years in existence. Its three primary objectives, development, regulation, and investor protection, are three areas where it has stood the test of time. India now is one of the largest markets globally. It is also, by the way, interestingly, one of the best performing markets over the last 2 decades, best performing emerging market in the last 2 decades or so. I am here as part of a project aimed at creating what would be a virtual museum for the Indian securities market. This, of course, includes the setting up of SEBI, but also, a couple of hundred years before that, because Indian securities market is one of the oldest in the world. We are aiming to do this by talking to eminent personalities who've been there through this journey at various points in time. And I have one such personality with me today. Mr. Ashish Kumar Chauhan is with me. Mr. Chauhan, great to have you with us here. Thank you very much. Mr. Chauhan needs no introduction. He's, of course, currently the MD and CEO at the National Stock Exchange. He's also someone who had a hand in the founding of the NSE. He's also widely considered one of the fathers of the modern financial derivatives in India. Mr. Chauhan, a pleasure speaking with you once again. Thanks very much. Recount for us, SEBI came into being in 1988. From your earliest memories, how did that happen, if you can begin right at the beginning?
So in a way, if you look at the SEBI was kind of conceptualized on the SEC model.
Right.
And of course, India was still into license Raj and that kind of thing in 1988. But there was a kind of a thinking about what to do. I had joined my first job at IDBI in 1991, but I have some memories because some of my colleagues from IDBI went to set up SEBI. And so if you look at early SEBI offices like Mittal Court in Nariman Point or Ernest House, they are actually the IDBI offices which were given to SEBI in those days. And so we had Dr. Dave, who was the executive director of IDBI, who became the first chairman of SEBI. But at that time, SEBI did not have the statutory powers. There was a division of capital markets in Ministry of Finance with controller of capital issues being there. So there was always a debate of whether to pass on the responsibilities and authority of what Ministry of Finance in essence was doing to new entity, which nobody knew how it would work. But in a way, SEC was a role model which was set up somewhere probably post depression in US in 1929, probably 35, 40 in that region. And then they also kind of structured or helped structure the entire securities market in US, and that's where other countries were kind of following up. And in that context, SEBI as an idea was kind of floated. And some of my colleagues of IDBI actually came back from the original team. Some people stayed back like Dr. Dave, Pratip Kar and a few others, but some people also came back, and that's how we heard the stories from them.
Right. So from 88 to when it was given powers?
92.
92. It was like a monitor, but without any...
it was just being formed. There were ideas being talked about, but it did not have the statutory powers. And without powers, there is no... Anyway, regulator is only a kind of a watcher rather than a watchdog,
So how was it taken? Because, the market has existed for long before this new entity came into being. Was there opposition? Just tell us a little bit about that.
No, naturally, that's why this debates happened from 88 onwards, because India has a very long tradition, as you said, of markets starting from 1820s, where the banks were traded, but official stock exchange was set up in 1875.
Right.
So it was still more than 100 years, 115, 117 years before SEBI got the power. And literally there were like 20 plus exchanges.
Right.
And many of them were 100-year-old plus. So
Right.
they were like very well established, very well known names with, of course, people who were eminent as their members, and society had reaped some benefits of the structure of stock market. So there were kind of people saying that we have been always regulated by ourselves, that they were called SROs, self-regulatory organizations, and they were broker
Broker-led organizations.
Broker-led organizations. They were also essentially political organizations because they used to have the elections every year or two, and they would get a new president who would be the actually head of administration in addition to the policy making. But there used to be treasurers, and all of them were members. And there used to be large floors where some of the employees would have some work. But effectively, all the decision making, strategies, execution, broadly everything, including disciplinary action, were basically done in a very cooperative way because it was an association of persons, not for profit. And so that's where, but there is a long tradition, right? So everything was already in place, and this new entity comes in, and people don't know what that new entity will do or what its role will be vis-a-vis themselves.
What were the one or two big things which marked a departure from the older way of doing things? And I mean, post SEBI, some of the...
Yeah, I think 92 was I think seminal year because of many reasons. But 91 is when we started liberalizing because of the balance of payment problems. And 92 is when the markets were going to extreme highs. I mean, in my living memory, such periods for India's markets have not come back. The kind of euphoria that was there, or probably it is my first experience of that euphoria. So that's how I think it was it is one of the ultimate things that happened in stock markets those days. But basically, the way liberalization was happening, and then the Harshad Mehta situation actually was at again peak, and the markets collapsed once it. There were too many things happening, too many moving parts. In fact, if you look at it in the world context, Russia was going through perestroika. The Berlin Wall was also kind of broken, and so world was in a huge turmoil. And the socialism or communalism was getting a bad name. The capitalism was coming up, and you have to look at it that in that context. That it's not only India which was going through some churn, but the world was going through the churn. And India took a turn from socialism into what I call market-based economy. We are still Socialist Republic of India, but we are a market-based Socialist Republic of India. And that's where I think the markets had to be given more importance. And that's what the government realized. And they also, of course, there was acute realization that Mumbai is the financial capital of India. And so the regulator has to be in Mumbai. And that also was a turning point. I think it is important to understand.
You mean it was earlier? The idea was that it will be based out of...
no, it could have been.
Never. It was
because the CCI or the Division of Capital Markets was actually in Ministry of Finance in Delhi, right? So you had to also take those decisions, although you may now think these were obvious, they were not so obvious, right? And so keeping it in Mumbai itself, for me, was a great work of fate, but also a great decision in retrospect. That it was closer to the market, and it also had people in Mumbai who understood how these things function, why they function, and so on and so forth. And it would also, in a way, slightly take away the politics from the commerce, So that's how, in retrospect, I think that was a better decision because if you had copied US fully, it could have been in Washington DC and SEC is there, right? So it could have been there, but here we segregated or separated, and I think then there have been many regulators like IRDA was set up in Hyderabad, and I think SEBI was the pioneer of even having self-regulatory, or what I call the specific sector regulator, which is autonomous and independent, was I think an idea which started with SEBI. And it's what I call it's exemplary performance over last 35 years has also prompted government to create many more sort of specialized sector specific regulators.
One institution which got created was the NSE, and you were one of the founders there when the team came together. How did that happen, and what was the interplay with SEBI? What was the idea? Because that was a big departure, right? I mean, there was the Bombay Stock Exchange. It was, as you said, for hundreds of years run by brokers, and this was a new exchange coming into being.
And in some ways, of course, Calcutta was there, which was second largest. Ahmedabad, Delhi was also pretty large, and pretty much more than, I think, 22 exchanges. So effectively, there was no need to create a new exchange. But post Harshad Mehta scam, the realization became acute that if we have to become market-oriented economy, then we need to have fair, transparent, efficient markets which are low cost and which are also model, sort of model markets. And that's where, of course, before that, there were several committees set up. There was, I think, GS Patel committee report, if I recall correctly. Then there was Firvani committee report. Both had suggested some sort of setting up of a model exchange. So in a way, when the NSE idea was mooted, it was also in the background of many other earlier committees. But, and of course, there was one more minor experiment called OTCI, Over-the-Counter Exchange of India, which was only for small stocks and market making, but automated exchange. So there were sort of few more things in background based on which the NSE's sort of idea was being formulated, and it kind of grew out. But in a way, SEBI literally was the prime mover of what was to happen, because 92 is when they got the powers. They were young and fledgling. There were not too many employees when I recall I used to.
But within a couple of years, they were setting up this other large, not at that point large, but another new exchange, which was supposed to be a departure from how exchanges were run.
That's why I'm saying 92 is when this thing, Harshad Mehta scam happened. And 92 is when actually the idea of NSE came into fruition. Although in 93, NSE got the recognition as an exchange, or it got formed. And 94 is when it started. But the idea of setting up NSE in a firm way actually ended up towards 92 end, because I was in IDBI, I had just joined in 91, and I was called into a 5-member team, which was to set up NSE in 92 end itself. And so we all started working under the research and planning department of IDBI, and that's where basically we started interacting with SEBI more often. But effectively, SEBI was prime mover, but it was still young. It did not have its own powers, and then powers came. It had to still regulate, form the regulations and all. And that's where basically SEBI was also learning with us.
But one is regulation, the other is learning what to do, right? Learning from experience around the world, from the US. I mean, tell us a little bit about that, because must have been a steep learning process for everyone involved.
Yeah, it was basically in a way trial by fire. A lot of people started joining SEBI. A lot of people started joining NSE, and kind of both were trying to figure out what to do in their own respective areas. And somewhere SEBI was always on the apex, and the exchanges were supposed to work under them. So that's where, but many of the shots, even support of NSE had to come from Delhi, because it was still a lot of licenses required. Like for setting up a single VSET terminal, it would require 60 licenses from 60 agencies. In every single place you had to set up that terminal. And even the SCRA, SCRR, all those regulations had to be changed, or those kind of powers had to be granted to SEBI. So it was like a cooperative efforts between both NSE and SEBI, and we were more on the operation side. SEBI was more on the policies and regulatory side. And then you had this investor protection part, which was very immediate and important because of the Harshad Mehta scam, where defaults happened and all those things. So investor protection was the main part. The development part was about how to create a better market. And so regulations were happening under the context of a different world altogether, which has suddenly come upon us. We had not, none of us had anticipated that this kind of scandal will come about. And somewhere I think Mr. G.V. Ramakrishnan took over as the chairman. And then he started basically trying to create regulations to register brokers. I think the first thing was about registration. And there were several strikes by stockbrokers across India saying that we will not get registered or something. I mean, if something of that type, that we will not pay fees and so on and so forth. I think SEBI stood firm, and that's how basically the entire
everyone
had to
fell in line. I mean,
fall in line, and SEBI slowly started getting the powers. And again, in the same context, that the people who were claiming to be self-regulating well were found not to be so great at doing it during Harshad Mehta scam. So they had lost a lot of credibility, and the society was also expecting
more regulation,
more regulations for the interest of the investors. And so it was, I think, in some ways, SEBI was getting powers during the ultimate time where SEBI could actually
exert those and
exert those things,
But do you think that was that the Harshad Mehta scam and the fallout of that kind of helped SEBI quite a bit in terms of taking control, so as to speak, and formulating, as you said, a lot of policies, registering brokers? That was a basic thing, the first thing, but other things as well?
No, that's why I'm saying, despite Harshad Mehta scam, there was still opposition, like the sort of opposition to registration of brokers onwards, right? So even basic
but it got
things,
easier after that?
No, then what happened is, I think there was one strike which was like 50-60 days long in 1995, if I recall correctly. And when the strike finally got over, but imagine the stock exchange is going on strike, right? It is kind of very difficult to fathom, but those days,
all regional exchanges,
at least the BSE went, and probably everyone else did. But what happened is, as soon as the markets opened after the strike, the MSU scam happened because of all that long period having passed. People had taken up positions and prices had moved. And there was another default, and which closed the markets for some more time to settle.
Unimaginable today, right?
Right. So for me, that also gave some sort of credence to what SEBI was saying in a backhanded way.
Things
right?
need to be regulated more,
right?
in a better way.
In a backhanded way, SEBI got more fillip, saying, see, the regulatory structures are not happening that way. And that's where basically, I think, slowly, I think everyone fell in line. And by the time NSE started functioning in debt market, probably we started in June as a trading venue, but July is when Dr. Manmohan Singh came and inaugurated. So we were like doing beta testing on commercial basis, and then
the
actual inauguration.
This is in what year?
This is in 94.
94.
And then November 94 is when, November 394 is when the equities market started. And then basically the thing started turning for better, because now SEBI had one completely automated exchange and other floor-based exchanges, and they could kind of work with a team which was, or work with an exchange which was not owned, operated by brokers. It was not even a association of persons, and which was completely new. They were, all of us were coming from banking background and very disciplined, no personal interests were allowed. So it was basically whatever SEBI came out with regulations, we were implementing. To a T. And that's where basically slowly things started falling in place. NSE's own technology worked so well in every aspect, and that's where basically people started realizing that this is automation is a good thing to do. And to the credit of BSE, NSE became online in November 394. By I think June, July 95, BSE was also online, at least with few stocks. And by I think December 95, they had migrated all stocks. So in a way, the two large exchanges, automation happened very in quick succession. And in some ways, SEBI's pressure worked, but in some ways, the advent of technology also worked, and it also created a kind of a framework where the new regulations will take over, because the automation allowed you to do many things which a physical floor wouldn't allow you, or you wouldn't be able to think about it, right? So that's where I think SEBI also quickly learned how to regulate newer markets, and somewhere along the line, world had not seen automated markets. India was the pioneer, NSE was the pioneer. Nasdaq was a screen-based trading, but it was not, because people used to place orders on screen, which we used to call quotes, and then if you had to trade, you had to call on phone. And New York and CME and London and all were floor-based, right?
Floor-based.
So this was pretty much the first market, and it took off because the regulations evolved
Kept pace and kind of...
so fast, because we were all learning and quickly working out with new regulations and doing stuff. And so how all these things happened, of course, MS Shoes was a clear case in point, where Badla or what they call credit notes were almost Badla style, which were basically used to extend the settlements. And so Badla was having a bad name even then, even during Arshad Mehta scam. Those committees recommended that Badla should be stopped. And it is not that that committee recommended or those two committees recommended, but even in probably 1890s or 1920s, there are committees which had also said the same thing. But Badla was not an Indian innovation, although we gave it an Indian name. It is known as Contango in the world markets, and it has been in existence from 1607 onwards, where the Amsterdam Stock Exchange was set up first time. So it was pretty much
a settled practice. But
postponement of settlement by either the buyer or seller, open position person, to pay the other guy is a common practice, and it smoothened the process flow in many ways. But when it became excess, that's where it ended up potentially going into the defaults. And the margining was not that systematic. Only when markets went up too much or went down too much, they would put markets, the margins only on buy side or sell side. But it was not systematic or systemic. And that's where one of the earlier initiatives we had was to basically have a margining system. And again, it was opposed as usual, saying we have not paid margins before. Why do you want margins when things are actually working out? And when things don't work, margins will also be insufficient. But somewhere slowly, and world was doing margining. It was not that India invented margining, but SEBI came out with those regulations. They became effective. Then there was this entire problem of share certificates. Share certificates were getting, they were a new technology. They were, in a way, there were even security printing and all. But still people were able to fake those certificates. And one day, I think in our clearing house, we got some probably 30-40 crores rupees. Those days, 30-40 crores like big, worth fake shares. And we were running 4 clearing houses in Bombay, Delhi, Calcutta, and Chennai. And we used to fly those certificates across India into Bombay and then take them back wherever the shortages were. And so that process was very tough, but we started getting inundated with the fake certificates. And that's where basically the concept of depository was it was mooted much before, even much before the stockholding corporation, which was supposed to be a depository, was mooted even before the NSE. But
when did that come into being?
Probably similar time, 93, 94.
Okay.
But the idea was older, because the world, many countries had depositories, but they were all what I call immobilization based depositories, where you had to keep physical certificates and then it kind of centralized the database. While as finally what we did was the dematerialized, because once you put it immobilized, might as well don't have it, right? And so that was an idea. Again, I think it was a great leap of faith by SEBI and Ministry to go for a Depositories Act, which was more on dematerialized basis, and it has solved us many issues. But this is how, as and when problems came, so based on the margining, we then said there has to be a guarantee of settlements, and that's how the clearing corporations were mooted, and then Novation, which is where basically multilateral netting which used to happen. But multilateral netting would mean when there was a default, you had to actually go back to the original person you had traded with, especially in case of default. And there are a series of default after that. So the clearing corporation was mooted, saying it will margin well, but also once you buy and sell both, then you have a novation only with the middle party. And that was a new concept in the world. And India adopted that, and I think it has stood us in good stead. But a lot of innovations, a lot of thinking, a lot of learning by doing, learning by experiencing problems is what SEBI did in early days. And in some ways, there were trials, there were errors like price bands. Automation happened on a floor. What used to happen is people used to have their badges. And so people will want to trade, this is sell, this is buy, and then all sorts of hand signals were there. Plus everyone will write that I have sold this guy so much. But if it was wrong, if it was mistake, then at the end of the day, both sides will go to their offices, they will match. I mean, they will punch in the data, the computers will match, and if there were sort of mismatches, they would have to be solved later on. So there was a way to solve later on. But in an automated order matching system like NSE's, there was no such way to check saying 100 rupee thing got traded at say 80 rupees next second, or even 10 rupee next second, because there are 10 and 100 is not too far, 1 0 only. And those mistakes started getting placed by the brokers. I think the first mistake was, I think on the 7th trade or 4th trade, a guy called Santosh Biyani, he placed an order on Reliance, and probably Reliance was 391 and he placed on 491. And so he ended up buying probably 1,000 shares. And then he came running to me saying, sir, now I am in loss of some 4 lakh rupees, which is like way beyond my capacity. And somehow you tell the other side to cancel. And fortunately, the other side agreed. We could call, and it was all Mumbai market, so we could solve it. But effectively, there used to be price movements also, which were very fast. So there were 3 cases, Ishwar Medical, Rupangi Impacts, and one more, which happened probably in 96. Prices moved up like very, very fast.
So that's when the concept of
200-300%. Yeah. So all these price bands and circuit filters and all, of course, we were listening to circuit breakers being applied in US and all, but they were physical circuit breakers because they were all floor based. But here we had to put it on an automated basis. So we had to again go back to drawing board, work with SEBI to say this is what we are going to implement. They would say, okay, try this. And so it was like a lot of learning.
Consultative, a lot of consultation.
Yeah, and it was like very iterative. Many times we would fail, come back with something new, because it would become too tight, then people will complain if it becomes too. And the idea was some people would manipulate it, but some people will also do it accidentally. So you need to balance the two.
need for both.
And also to ensure that you have to show the market in an orderly way. It shouldn't become too volatile. Even if the market is volatile, if it is going beyond the normal volatility, you need to do something about it, because otherwise, in 1 second the price is 100, next second it becomes 10,000, next second it becomes 1 rupee. It just creates a total chaos in terms of the margining, in terms of settlements, and everything else. And that's where this smoothing and other things started happening. The price band for the taking a closing price instead of the opening price, because open can also do it with a gap, and so it can bankrupt many. So those are the things which were learned out of trial and error by SEBI and exchanges both.
You're someone who's considered a pioneer of modern derivatives, and they started trading exchange-based derivatives, etc. When did that come about, and what was the thought process behind it, and what was the story really? I mean, derivatives and futures and options are now how many times bigger than the cash market, right? I mean, but what was the start?
So what happened is the Badla had to be banned, right? So that was basically the start, and Badla got banned. And now people needed some way to take longer duration positions. And so, and NSE had by that time become larger than BSE. I think October 95, literally 11 months of it started trading in equities, it became larger than BSE. So in a way, the solution had to come from somebody who was not traditionally sort of into Badla. And NSE was running a weekly cycle of trading, that is Wednesday to Tuesday. And BSE, because of that, started running from Monday to Friday. And so there used to be like an overlap. People used to move from one to another. And that's how some amount of sort of postponing the settlements used to happen between the two exchanges. But there was a need to do it. Badla was banned. And so there was a way to think about it. That doesn't mean that it was allowed, because the Securities Contract Regulation Act definitions and even the law did not permit wagering. I mean, the Contracts Act does not permit wagering, and the Securities Contract Regulation Act was very clear that whatever happens on spot market is a spot, and Badla was just a mechanism to postpone, not have a time bargain, right? This time bargain is what we call, it was defined in some ways more adequately on what is banned, what is not banned in the Commodities sort of Act.
Regulation.
Commodities sort of Contract Regulation Act. So that's where basically we had to go back to the drawing board. But I think first, I was in charge of equities market at NSE. And then 95 and we became large. So then Dr. Pyle called me, who was my boss and MD of NSE, and he said that now start thinking on derivatives. Unfortunately, there was a big mishap that had happened called Nick Leeson and Barings Bank in Singapore, where the Barings Bank used to be very large British bank, which was also very storied and old. I think it was the oldest bank in Britain. And we used to look up to Britain those days, right? And so single trader sitting in Singapore, not even in Britain, brought down the entire bank by trading in Nikkei futures, which was actually a Japanese index future. So
I think there's a movie made about it. I can't remember the name.
But I mean, Nick Leeson in my time is extremely famous. Barings Bank collapse is one of the largest scandals that happened in the world those days. And so people were afraid of getting into derivatives, even talking about derivatives. And Warren Buffett had actually said that derivatives are weapons of mass destruction. And so in that context, I think first later I wrote to Mr. O.P. Gehrotra, who used to be director I think senior director in SEBI. That time, some of the designations we have now were not there. And so if you search into the SEBI's archives, you will find that that it was first, I think December 95 is when I wrote to him saying, we are interested in signing up a derivatives market, which will allow you long-term sort of pricing for securities market. And then, of course, SEBI had to go through it because there was a background of Nick Leeson. There was opposition from the people who wanted Badla back. And so sort of a separate committee was set up called L.C. Gupta Committee, which probably would have come up in 95. And then Mr. L.C. Gupta was a renowned equities researcher on the investor side. That is how many investors are in India and all. So he was, because there were also apprehensions that Indians would not know how to trade in derivatives because it's all highly mathematical and things like that, right? And so, and how to protect investors' interest. And that's where a large committee was set up. And naturally, I couldn't be a member because I was
You were proposing.
I was proposing it. And so people from all walks of life and experts from the markets, researchers, academics were involved. And that's where basically the L.C. Gupta committee deliberated for very long. I think I don't recall how many meetings were held, but I had to keep on
following up.
And also all the questions they were asking, I had to write. There was a big diligent way of documenting all those things. I'm sure those papers would be there with SEBI. And then finally the report came. But in the meantime, we had to do a lot of hard work because the committee was of the opinion that you cannot initially start with equities derivatives. We'll have to start with index derivatives because index is less
volatile
and also not easy to manipulate.
Right.
Right. And so that's where in committee wanted an index, but they said this current indexes are not that
Suitable.
great. In fact, within around 20 days of NSE starting equities, I started an index called NSE 100.
Okay.
And it was a real-time calculation index because we are like all was automated. So I had started that index. And then we worked on creating a new index, which was NSE 50. Again, we worked with researchers, but they wanted to have variable company index. And I said, boss, everywhere there is a fixed number of companies. If I do too much of innovation, then people will actually pass it by. So it was coming out to be like 63 companies or something as per the calculation. I said, let's do close by 50, we do it. And then again, when I wrote to SEBI that we are going to have this index, I think Mr. Garotra called me up saying, boss, Nifty is not a great word. So I said, what happened, sir? So he said, no. Nifty 50 used to be companies which went up in prices in America
In US.
in 1960s and 70s, and then they collapsed. So it doesn't have a good sort of background to it. And why don't you change? You can keep 50, you can do whatever, but why don't you change name? I said, sir, problem is already name has started, and NSE 50 will finally be called Nifty only because it's catchy, it's English word, and so finally it was allowed. And so that's where
the index came into being.
Nifty 50 came into being, and of course it was a real-time index. And then still between the committee report.
This is 94.
No, this would be 96, 97.
97.
Yeah, in that range.
Because trading started a little later in Nifty 50.
What happened is then committee was also opinion that you need to basically have certification,
Right.
because derivatives like a way beyond things for normal equity traders. So you need to have examinations and curriculum, and also we had to set up a new framework called NSE Certification in Financial Markets, which was completely automated. We created curriculum with experts. We created this exam, and then we said you can download the book from the web, print it, and study your own,
And then give the
and
exam.
then give the exam. And we had kept exam centers across NSE offices in India. And that's how the NSE certification in financial markets happened, which finally became the NISM's certifications. And then there were, of course, I started teaching in 2 colleges in Mumbai, one Somaya and SP Jain. One course each I took because nobody was talking derivatives. Derivatives was not a good word by that time. And so it was like, and it is very tough if you read the old books, John Hull and all. They were like highly mathematical. Even engineers will find it tough. So I had to do it in a very simple way and things like that. And then we started talking about it across India, about what is derivatives as and when it comes. But there was a problem of SCRA. It had to be changed to allow the index to be traded because the bargains in differences, that is a trade with settling differences, were basically prohibited.
Okay.
And so index had to be found as a security because index was not a security.
Okay.
So index was to be described as a security in the definition, and then the derivatives on that were to be allowed. So both these things had to be set in motion. So finally the parliament passed it in 2000. That's where basically the derivatives started. But there are like millions of stories on what happened in those 4 years from say early 96 to 2000. And because this was such a esoteric subject, not many people understood. There was, of course, an experience in the world about a large bank collapsing. And so, and the mathematical nature of Black-Scholes and everything else was like too much for people to grasp and things like that. But over a period when it started, it took some time, but slowly people started
now I think we have one of the largest volumes of the futures and options side in the world.
Yeah, right? It's now the largest derivatives exchange in the world for 4 years in a row. And I mean, it's what I call, because it, in a way, the other markets are very institutional, especially US.
Yeah.
That's why they have fewer trades but very large.
Yeah.
And they also allow OTC.
Yeah.
Whereas in our markets,
It all goes through
SEBI took a decision to not allow what used to be called as curb trades. Why curb is because the markets used to trade in BSE between 12 and 2 p.m. Okay, and then people would trade even at 10 in the night on the footpath and even in railways, right? So those trades would then be reported next day, and they used to be at completely arbitrary price vis-a-vis what the price is closed. And so that's where basically to stop this price manipulation or unaccounted for trading, SEBI said, no, you need to do all the trading on the exchange and all orders have to be exposed to the market only. It cannot be privately done between you and me and then reported to the exchange. So SEBI created those regulations to ensure that the public knows what is happening and they have a way to participate.
Mr. Chauhan, talk to us a little bit about how the entire process for settlements really evolved. We are at now a point where we are talking about instantaneous intraday settlement, but take us through the history of this.
So in a way, India was basically having a traditional, what we call trading period based framework. So you used to have like 15 days of trading and then you would settle after 30, 40, 50 days because the certificates had to come from across India. And so once you figured where to deliver what, those stocks would come in and that's how they will be given. And there were A group and A group shares used to go through the clearinghouse, but B group shares and all were basically on a bilateral basis settled, although on the exchange floor, and then the sort of very small stocks were actually traded and settled on convenience between brokers. There was no fixed settlement cycle. So that was broadly, you trade 15 days and then after 30, 40, 50 days, the settlement cycle will be announced and that's where you exchange the money and the stocks. That was broadly when till 94, 95. And then NSE came into picture and it started basically having what we call a weekly trading cycle. So from a 15 days trading, it was a week, literally 5 working days, which was a great improvement from 15 days. But better improvement was on settling within 5 days of that. So it was like a trading cycle based, but on the last day, if you bought or sold, then probably you will get it, the money or securities in T+5 basis. And then later on, because SEBI became member of IOSCO, and there is a common framework across the world because a lot of people started investing into other countries. And that's where common framework had to be adapted. So the rolling cycle had to be adapted. So we started with T+3, then T+2. Each time there were opposition because people had to do harder work, faster work. Also
upgrade
mistakes
systems
and mistakes had to be less or probably non-existent. So that's where even the custodians had to move because they're global custodians, local custodians, all sorts of complexities would come. And then T+2, I think we were pretty much pioneers in the world. But in say into 2020, probably we started talking about T+1 that we need to go, and probably that also came out of our own understanding, our own capabilities. That by the time we had become very confident as a system. SEBI had become confident as a regulator that this system can handle it. And that's how they started talking. And of course,
and that has also happened in phases. It's not as if the entire market has moved to it.
There is also a story to that SEBI said we'll do T+1, right? And immediately opposition started from variety of corners. But more interestingly, the largest issue was coming from the foreign sort of people who invest, because they have to also, they sit in Singapore or Hong Kong, their custodians are in US, global custodians, then their local custodians are in India, and all that loop of information giving, taking, plus buying of foreign currency, paying for that or selling foreign currency, and
all that has to be,
all those things had to be completed in a short time. So there were practical difficulties which were expressed, and so it became like a kind of a stalemate, that how do we go forward into this thing. And so one day a meeting was called, and so finally we decided that we need to have a phased approach in a way that the smallest stocks don't have any foreign participation. So let's
Start there.
experiment with that and give a very long, almost 1.5 years were given from day one of going live on T+1 to the end of that full cycle. So by the time, slowly we started with like few stocks, then few hundred, then slowly we kept on adding. But I think for first 6 months or 8 months, only the stocks which were there, which had no foreign participation at all, right? And so Indian brokers, Indian markets became used to it. And then slowly, larger stocks came in where foreign participation was. And then everyone got used to it. And today, literally there is no market on T+1 except India.
Right.
And we get called across the world in all conferences to explain to them.
How does this happen?
How does this happen? So wherever I go on any conferences relating to World Federation of Exchanges, or my colleagues go, or any other securities markets event, the first question which the regulators of those countries ask us, and also the exchanges ask us is, and of course the market participants, custodians, all the people who settle, they will ask how India with such large numbers is able to move so fast. I think credit has to be given to SEBI for sort of minutely looking at all the details, creating solutions which are palatable, giving long time so that it gets fine-tuned. So I think SEBI has learnt a lot in last 30 years. But in some ways, I look at the other way around also, that SEBI being literally, it is a child of the modern era of the computerization. It is a much larger understanding of how automation works than all the old style regulators. And that's why they are able to basically work on all these in much more nitty-gritty. Today, I don't think there is any regulator who has people of the caliber of SEBI, which are able to go into bits and bytes as much as the regulatory clauses. I think SEBI has evolved with young professionals joining them from day one. They've evolved a cadre which is able to understand very deeply the connect between technology and the markets. And I think that is what has helped them do these things much faster in a more better way and without many to and fro's.
That's very interesting. Tell us a little bit now about how the listing of the Bombay Stock Exchange came about, because there's a story there as well.
In a way, NSE was set up. It was set up as a for-profit company, whereas many of the older exchanges were set up as association of persons, but not for profit. And some of the older exchanges were also companies, but not for profit. And so they were not for profit, whereas this was for profit. And NSE became immensely successful. And they were more regulated. They were very run very professionally. And they had become like role model for the world to follow. And so the government thought that because it was also automation was very costly, many of the older exchanges could not automate themselves, like Hyderabad or Patna. And even if they automated, it had to be continued, right? So the cost of running it was also becoming large. When you had a floor, there was no large cost, right? You had to just clean the floor and everyone trades. But when you have to do automation, it has to work, it has to have computer experts running it, and then scale happens, then all these manipulations have to be stopped, price bands have to be put, settlements have to happen. All those things were not everyone's cup of tea. So government think tank in Delhi and even SEBI thought and how this would happen. And finally they said, if we go by the NSE model of make them for profit, and then the professionals will basically take over and then they will run it, and not necessarily only NSE, but even other exchanges could become larger than NSE because all of them were allowed to trade across all the cities in India, or all the entire jurisdiction of India. And that's where basically the government of India, I think in 2005, came out with a notification that the exchanges which were not for profit will become for profit, and more than 51% of the shares will have to be sold to non-stock brokers, because NSE was a what we call demutualized exchange. There were no stock brokers were not owning any exchange. So it was basically to segregate the decision making in the organization, the exchange, from the players, because they were themselves regulating. It's like you play cricket and you are the umpires, and there's bound to be a problem. So they wanted to segregate like what NSE did. And so that's where basically they wanted owners to be different, the professional managers to run it rather than the elected members to represent. And that's where basically I think 2005 this notification for BSE came, because it was the largest exchange other than NSE those days. And then slowly, I think for all exchanges it came. And then BSE became demutualized. That is, more than 51% shares were sold to non-stock brokers in 2007. And SEBI's condition was that not more than 1/4 of the members would be from stockbroking community. So like BSE had 12 board members, out of which 3 had to be from stockbrokers, could have been elected or otherwise, and 9 had to be basically outside. And then SEBI nominees, or what they call PIDs, public interest directors, had to be at least 50%, and all those regulations were there. So 2007, BSE kind of became demutualized, and there 5% was maximum allowed for any exchange or any individuals, but 15% were allowed to financial institutions. And then Deutsche Börse, which is a German exchange, and Singapore exchange, both kind of acquired 5% each in BSE. And then in 2009, I joined BSE as a deputy CEO. So I came to meet the chairman, SEBI that time, Mr. Bhave. And I said, sir, now there is a basically demand by the members, and not only stockbrokers, but now we have larger number of shareholders as per the demutualization process. Now they are asking for listing, and we need to now prepare for it. And he said, okay, we'll set up a committee to figure out, because this is the first time we are doing it, so we need to do it in a more careful way. And that's how the Bimal Jalan committee was set up for listing of stock exchange. And after a lot of deliberations, Bimal Jalan committee report came out and it said exchange cannot list. So now there was a situation where all these private exchanges were there with a lot of outside shareholders, but no way to exit. And so now it was stuck in kind of a limbo for very long. And finally in 2016, SEBI took a decision that they need to provide for the listing of stock exchanges also. And so they gave a permission to BSE's prospectus in 2016, probably towards the end, last quarter. And then IPO was done. I think the listing happened on 2017, just few days before the budget. So it was like almost 2005 to 2017, almost 12 years of discussions, debate, understanding whether exchanges can become profitable, for profit. But that debate was also kind of infructuous, because NSE was already for profit. Now whether to list or not was the only question. But if you invite people to invest in those shares and then they don't have any way to go out, then again it creates a pressure. But it took almost 12 years, a lot of debates, a lot of discussions, a lot of public seminars where I had to participate. But eventually it worked out, and of course then later on we also listed CDSL. That time I was in BSE, so we listed CDSL shares also under the same thing. But the regulations, which were very elaborate about fit and proper, who can participate and buy shares, and they were much more stringent than normal stocks, which many of them currently also remain. But that's how the listing of BSE and CDSL happened.
Mr. Chauhan, we could go on with so many interesting stories that you've been kind enough to share with us. But I think I'll stop for now. Thank you so much for doing this with us. Really appreciate your time here. Thank you.